right, good afternoon, everybody. This is Larry Horner from Zuma Payroll. Wanted to just get started by saying thank you for your time. And all clients or businesses that join this webinar. If you have any questions, you can type them in through the webinar. It should be pretty brief, maybe 15, 20 minutes. Type in the questions and we'll get to them at the end. And my guest speaker, Wilfred Baptiste from Financial Blind Spot, should be joining us any minute, but wanted to take just a couple minutes before we get started with, the title here is how does the new Paycheck Protection Program, the Flexibility Act, which was passed on June 5th, how does it affect my PPP loan forgiveness? So we'll also give some people some information that maybe don't even have the loan yet, and they're considering, applying for the PPP loan. But the main part and the reason for this webinar was just to kind of address, high level, some of the main parts of the debt forgiveness. If people are looking into applying for the PPP loan, we had a webinar a couple weeks ago that explained who is eligible. This one, we're going to really dedicate most to the loan forgiveness component of the people that already have the PPP loan, which is the main focus of everybody, right? So if this money is spent correctly, it does turn into a grant. So everybody's focused on doing the right thing. And there were some really good changes on June 5th that made that actually even easier. Before we get started, also to any Zuma payroll clients out there, we do have a report to help you with the loan forgiveness application. It does give you all the information that you need to fill out that application for loan forgiveness. So anyone out there, if they are an existing client, they have a PPP loan, they can get in touch with me, they can get in touch with their Zuma payroll rep, and we have a report that will give you all or not most of the information that you're going to need to determine your loan forgiveness as the weeks go by or fill out the application for the loan forgiveness. So wanted to make everybody completely aware that we do have a report, we do have this data, we can help you with it. You just need to reach out to us and we'll get it out to you. Now, the information is always changing. I think it's already changed. The loan itself has already changed 2 or 3 times. So take that into note, right? So I know everybody wants to start doing their calculations, but I think the disclaimer here, or what we're learning through this process, is that the information is changing constantly. So even some of the things that we speak about today might change again tomorrow. All right. Okay. Yeah. So Wilfred, wanted to see if you could just kind of, as of today, June 19th, and I gave a disclaimer. I don't know if you heard it, basically saying that, everything can change, right? What we're talking about today could change by tomorrow, and there's already been changes. I know the title of this webinar is the change that happened June 5th to the loan forgiveness. But I just wanted to make that disclaimer and just say, hey, listen, things are changing. Constantly. So I want to see if you could, before we get into the 4 most common questions out there today about the new Paycheck Protection Program Flexibility Act that Trump signed on June 5th, because people are very focused on the forgiveness aspect of the PPP loan. Wanted to see if you can kind of just maybe give a high level on the PPP loan, itself, and then we'll get into these.
Yeah, absolutely. So the Paycheck Protection Program was enacted as part of the CARES Act. And the way I like to position it and help people understand, especially when it relates to what expenses are forgivable and which ones aren't, I like to bring people back to the original name of Title I of the CARES Act that specifically deals with everything PPP related, and it's called Keep American Workers Paid and Employed Act. So that right there gives you an idea of what they had in mind when they put the program together. Another thing that is very important to note, and this is actually one of the main reasons why we keep having to make all these changes, is the underlying assumption behind setting up the PPP was that we were going to hunker down for a few weeks, a month, maybe a month and a half. And then after that, we'd come out of this thing swinging. And 3 months later, we would not even remember that, this whole COVID thing was even a thing. So that's why when it was set up, they set it up so that you had 8 weeks worth of help. And it was done in a way so that as a business owner, you could pay people for 2 months for them to stay home. And then at the end of the 8 months, it was largely expected that everything would go back to normal and we would not skip a beat. But what's happening is that this crisis is very different than what was anticipated. And it turns out that there's a lot of industries, a lot of specific types of companies that are going to need a lot more than 8 weeks worth of help. So that's why there's been all these changes that have been motivated by business owners lobbying and saying the way this is designed, it doesn't really help me. And all of these actions have resulted in a lot of changes. The Paycheck Protection Program Flexibility Act actually being just the first of many changes that have happened over the past couple of weeks. And I fully expect even more changes to happen in the not too distant future.
Yeah. So I think that the flexibility portion, which you'll go over, that was a change probably because some of the businesses said, hey, this is great that you can, help us out and give us this money, but we can't use it. We're not open yet, right? So it's constantly changing as the situation out there changes.
Yes. So the restaurant industry, their lobbying efforts were at the forefront of the movement that resulted in the Flexibility Act, because, as you know, they can't really open yet. I live in Westchester, and just last week they started phase 2, and now restaurants have only outside seating. But you can imagine there's a few restaurants that don't even have outside seating. So for the industries that cannot reopen yet, their lobbies have been instrumental in getting the Flexibility Act passed, because even if they did get the PPP, they cannot use it optimally. They could not use it optimally the way it was designed before.
Yeah, before that, right? So I mean, if they got the money in May, and at the time that before June 5th, they had to spend that money in 8 weeks in order for it to get forgiven. It just wasn't working because they weren't even close to open. So I wanted to go into the most recent change as of June 5th. It's called the Flexibility Act. Is it? Is that okay?
Yeah.
And that
it's the PPP Flexibility Act. So what I'm going to do, I'm going to go over the PPP Flexibility Act, and then I'm going to go over the interim final rule that came out officially this morning, and point out a couple of the things that it changes. And then I will give the audience kind of an outlook on what efforts are still being made to bring even more relief to them. So whatever's being done right now, keep in mind that it's being done with the backdrop of more changes coming. And it's not even, I think more changes are coming. Those changes have actually already been brought up to Congress and are being deliberated. We just don't know which ones are going to pass, okay? So for the Flexibility Act, what it brought, the very first thing was that the covered period, which was 8 weeks and was supposed to sunset on June 30th, has been extended. It is now up to 24 weeks, or you can select to use the funds until December 31st, 2020, depending on when you get your loan.
So if I got my loan, I used to have 8 weeks to spend that money, and you'll go into the rules. Now I have 24 weeks.
Now you have 24 weeks. There's nothing for you to do. There is no paperwork to file for that. If you want to stick to the 8 weeks, all you have to do is when your 8 weeks are done, then you file for forgiveness. That is your signal that you are using the 8 weeks. If you want to take advantage of the 24 weeks, you just do not file for forgiveness, and it will automatically be assumed that you're taking advantage of the 24-week window. Now, there is two things that I want to clear out that I have seen that have led to confusion. The first one is that you have 24 weeks to spend the money. That does not mean that you have to spend the money in 24 weeks. It might take you 12 weeks, it might take you 16 weeks, it might take you 20 weeks, but you have up to 24 weeks to spread that expense. The other thing is that some people have misunderstood that because it's now 24 weeks that they're going to have another 16 weeks worth of money. That is not the case. You still have 8 weeks worth of help.
Yeah.
You just have 24 weeks to spend it. Okay.
Yeah.
So I just wanted to clarify these 2 points.
Okay. Yeah, because they're saying that maybe your business, so they gave you 8 weeks worth of payroll. They gave you that loan, and maybe all your employees aren't back yet, and you need a little bit, you need the economy to get started going again. So it's not that they're going to give you more money, like you said, to clarify, it's just more time.
More time to spend whatever they gave.
Gotcha. Okay.
So that's the covered period. The second one, the second big change is the 75-25 mandate. Where in order to qualify for full forgiveness, you had to spend 75%, at least 75% of the loan proceeds on payroll expenses. That has been brought down to 60. So in order to qualify for full forgiveness, you only have to spend 60% of the money on payroll expenses, and then the other 40 on non-payroll expenses in order to qualify for full forgiveness. Now, in the way the law was written originally, the Flexibility Act, in the way that it was signed by the president, it seemed to imply that if you did not meet 60%, you did not get any forgiveness. So it kind of created a cliff. And the senators were quick to notice that. And in the interim final rule that came out shortly after that, they clarified that there is still a sliding scale, meaning that if you don't spend 60% of the money on payroll, you still get forgiveness. It's just proportionally reduced.
All right. So it's not it's not of, hey, if I happen to, through this loan, allocate 55% to payroll, then they'll kind of just say, all right, we'll penalize you on that 5%.
Yes,
but the majority of it,
forgiveness on that 5%. Yeah, but and it's not even on that 5%. It's just that the payroll, the amount of money that you spend on payroll is the driver of your forgiveness calculation. So your payroll has to be 60% of what you spent. Your payroll has to be 60% of what's forgiven. So if you received 100 and you spent 50 on payroll, then they're going to calculate what amount is 50 what amount does 50 represent 60% of? So then they'll do the calculation and they'll be like, okay, so then we're going to forgive, I don't know, another 30 something for your other expenses, or 40 something for other expenses. So you will get maybe 90 of the 100 forgiven. It's not exact math, but I just want to give people an idea of, how it works out. They're going to say, instead of spending 60 on payroll expenses, you used 50, then we are going to proportionally reduce the amount of non-payroll expenses that you have that is forgivable, so that $50 represents 60% of the amount that is forgiven.
Okay, so yeah, they'll kind of, so you're not going to get, it's not like they're going to take away and now you're going to have to pay all of it back. I think that's the main message.
No. The majority of it will still be forgiven. You just have a little bit that is not forgiven because you did not hit the 60.
So now, if I'm a business owner out there and I'm going, hey, all right, so if I always like if I get $10,000 and I say, all right, I'm just gonna cut I'm gonna just cut some checks and get this over with, and 6,000 of it needs to go to payroll. Obviously, I can't just pay that to anybody, right? And there's obviously some rules in how many employees I have to pay, and can you explain more about how that works?
Yeah. So when you apply for the PPP, there are a bunch of different scenarios as far as what you use for eligibility and the amount that you qualify for. The simplest case is for the sole proprietors out there, and by sole proprietors I mean actual sole proprietors from legally. I'm talking about single member LLCs. I'm talking about 1099 contractors, people like that. For them, the calculation was very simple. It just went off of line 31 on Schedule C in their tax return. That was their net employment, their net income from self-employment. They took that amount, especially if they have no employees, they take that amount. They divide it by 12, they multiply it by 2.5. So then they get, let's say in your example, they get $10,000. Out of that $10,000, now if they want full forgiveness, they can pay themselves $6,000 of salary and then use $4,000 for other things, right?
And now in Wilfred, I guess more of our clients out there have obviously employees, right? So Can we use an example of, say, listen, and I think the FTE headcount, right? There's a calculation for that headcount. Let's use the example of 10 employees, and now all of a sudden this loan forgiveness comes along. Everybody's focused on it. The Flexibility Act makes it a little easier to get that forgiveness. How does the Flexibility Act, for example, if I'm a 10-man company, or I had, let's say after the calculations, I had 10 FTEs, and I got $10,000. What was, how does this change how I have to spend this money with that example of 10,000 or 100,000, whatever you want to easy math, and I have 10 FTEs?
So for the FTEs, the first thing that I want to say is that your FTE is based on the average FTE that you had in 2019. So there's a couple things that can throw you off right off the bat when you are spending your PPP money. The very first thing that can throw you off is if you had great plans for 2020 and you hired people in January. So that is going to throw your calculation off. The second thing is if you have people that were with you in 19 and that over the course of the year or maybe early in 2020, they resigned. So it would make it harder for you to meet the 60-40 deadline and get the full forgiveness. Now, that has been alleviated in a lot of ways by the extension of the 8 weeks to 24 weeks. But if we're going to get into the FTE, I kind of want to set the table, if you will.
Okay.
Before the Flexibility Act, in order for you to get full forgiveness, if you cannot bring back full FTE, you had a 4-part test. Okay, you had to submit a written offer for the people to come back. They had to reject that offer. You had to have a record of them rejecting that offer and submit that record to the state unemployment office within 30 days to say, hey, I offered them to come back, they wouldn't come back, blah, blah, blah. So in this way, you would be affected only from the head count part, but from the expense count, you would still be affected, right? Because it was set up to be a double whammy. The Flexibility Act makes it easier because your loan forgiveness will not be reduced due to a lower number of FTE if you are, number one, unable to rehire a previous employee. Number two, you are unable to hire similarly qualified employees before December 31st, or you are unable to return to the same level of business activity as pre-COVID because of the new standards, for example, sanitation standards, social distancing, or any other safety requirements.
So if I'm a restaurant and I can only have 25% capacity in my restaurant, well, then I don't need that many people.
All those, exactly. And then the fact that you don't have that many FTEs is going to affect you less. But I want to add that it might even be less of a concern because you are not under the gun for 8 weeks.
Yeah, so now I have 24 weeks.
So even if you're running at a third of your FTE, you could still get like 24 weeks to spread that expense and still be able to spend all of the money.
Now, but is to get that loan forgiveness again, because everybody's, I know that you're saying, hey, listen, don't be focused on, you're not going to lose it all if you come close, so just, use the money, operate, use it wisely, operate your business. But if I come with the FTEs, part of the head count, is it similar to part where I have to spend 60% on payroll? Is FTE head count, do I have to adhere to 60% of who I used to pay in a normal situation? Is that how FTEs work? Or tell me more about that.
So the FTE calculation itself, because the FTE is a number, it doesn't matter what goes in there. So you don't have to rehire the same people. All that matters is that number is the same at the end. So you could start with 10 people that were full-time, that were, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then you end with 5 full-time people that count as 1, and then 10 part-time people that count as 0.5. That results in 10 FTE. It doesn't matter what goes into the actual FTE. All that matters is that number is the same.
Okay, and to all the clients out there, and there are calculations and calculators to help a business calculate FTEs. But for any clients out there of Zuma Payroll, there is an FTE headcount available through a report that we can give them. So Wilfred, I was actually saying before you jumped on, to any of our clients that are listening to this, there is a report that will help them fill out the application for debt forgiveness. It obviously has the payroll data as long as they gave it to us, and they've been running these people through payroll. We're going to be able to create a report that is also constantly changing also, but it does have the FTE headcount. It does have the information line by line, literally line item by line item, to help them fill out that application for loan forgiveness. So I'm hoping that's useful for people out there.
Yeah, so you kind of teed it up perfectly for me because that has been one of the main points that I've been making to my clients. Whenever new guidance comes out, there is a rush to interpret the guidance and calculate what the loan forgiveness is going to be. And there are calculators out there with some underlying assumptions. For example, the first batch of calculators out there, they had the 75-25 basis to calculate forgiveness, and then the law changed, and then the calculators had to be updated. Today, a couple of days ago, the SBA published new forgiveness applications. There is an easy form, and then there is I don't know if there's two forms. One is easy form. I don't know what the other one, what they call it.
Not easy. The not easy form.
So yeah. So this is stuff that is constantly changing, and I know that there are companies out there that have software solutions to help with that. I know the audience here is clients of Zuma Payroll, and I know of your solution. So what I would suggest instead to everybody on the call is to be less bogged down by the technicalities of FTEs and all of that, because you're going to have the tool that is going to help you figure that out. And instead, look at the money and try and figure out what is the best use of that money for your business. Yeah. Because if you had gone and gotten the money and rushed to spend it in 8 weeks because you were focused on getting maximum forgiveness, only to find out that, okay, now, I could have used it in 24 weeks. If I had known, I would have waited. As opposed to taking the money and using it in really the way that is the best for your company, and then keeping an eye out for developments. And this really leads me to the developments that are being talked about.
So now, Wilfred, you bring a good question. So let's just say that, hey, as a business owner, what my business needed at the time was to use all of the money. The entire amount of the loan, I had to use it on payroll, and that was just what I really needed to keep the business going. What would happen to me in that scenario as a business owner?
Okay, so this is where we talk about the developments that are being talked about. There is currently about $130 billion left of PPP money that has not been applied for. The reasons for that are many, but the main two are that there's a lot of people that still are not sure that this money is going to be all that helpful to them because of all the restrictions that it comes with. And then the second is that the guidance is constantly changing. So people that are on the sidelines are thinking, oh my God, this is going to be more trouble than it's worth. So there's about between 120 and 130 billion dollars of money that's still sitting there. There is a proposal that they're calling the prioritized Paycheck Protection Program that would allow a company to go and ask for more PPP money if they've exhausted their PPP money and they can show that they have suffered 50%. A 50% loss in revenue. Now, those two thresholds, I expect them to change, right? But the gist of it is that there is a proposal out there. It has been brought up to Congress to allow companies to go and ask for more PPP money if they've depleted their PPP and they're still in trouble. Okay, so that's the first thing. The second thing is that the forgiveness, companies that are only taking 8 weeks of forgiveness, those companies are applying pretty soon, right? Towards the end of this month, they're going to start having to apply for forgiveness. There are 2 banking associations that have written an open letter to Congress and asking for all PPP loans under $150,000 to be automatically forgiven, no questions asked. Because when they look at the PPP that have been dispersed, that threshold of $150,000, 85% of the recipients of PPP have gotten money that is at or lower than that. But when they look at the loan volume, that decision would only affect 26% of loan volume. So it would be a measure that would benefit overwhelmingly the smaller recipients of the PPP, which are the small businesses, that keep this country going. So that is.
Well, that'd be great. So you're saying, hey, they wouldn't have to fill out the application for loan forgiveness. It would just be automatically forgiven.
It would be blanket forgiveness. So I bring those up just to illustrate my point that yes, it is extremely important that business owners out there be aware of what's happening. But if I were to suggest a course of action, it would be, yes, understand what's going on, have tools to help you track this thing, but don't bend over backwards and make decisions that are questionable for your business because you want to get maximum forgiveness, because who knows, it might turn out that in the end you didn't really have to do anything, and you could have used the money for the better purpose for your business.
Now, there's a question I have here, actually. What if you use the entire amount on payroll? That's the question. Yeah, so how would you answer that?
All right, so for that, I might need a little bit more context, but there is nothing in the law that has a maximum use for payroll. There is definitely minimum. I mean, for forgiveness purposes, it says that you have to use 60% of the money on payroll. But there's nothing that precludes you from using 100% of it towards payroll. That's the first thing. The second thing, though, that to keep in mind is that if you're going to use all of the money for payroll, the only way I can see it happening, or actually not even, because I was going to say the only way that I see it happening is if you had hired more people in January, where your employee count would be higher at the beginning of 2020 than it was on average for 2019. But that is based on the assumption that you would only have 8 weeks to spend the money. If you have 24 weeks to spend the money, it is very, very possible to spend 100% of it on payroll.
So what if it was what if I got $100,000 and within 7 weeks I spent the whole $100,000? Would they then say to me, okay, $60,000 you get to keep, and you just have to repay $40,000, and we'll give you 5 years? How does that work?
No. Are you saying if you spent all the money, or you spent none of the money?
All of it on payroll.
If you spend all of it on payroll, then you get 100% forgiveness, because the 60 is a minimum. It's not a max. There is no max.
Okay.
So you have to spend at least 60. If you receive the 100, you have to spend at least 60 to get full forgiveness.
So I don't have to spend certain amount on business expenses.
No,
the 60% is a minimum on payroll.
All the other stuff is incidental. The driver for forgiveness is what you spend on payroll.
So I got to spend it on at least minimum 60. The FTE headcount, though, because they want to make sure you're not just cutting a check to you and your wife, and there you go, you spent it.
Now, I'm glad you mentioned you and your wife. For that scenario, spending 100 on payroll costs, it raises a question that I have not found the answer to just yet. So remember, the compensation limit was 100,000. So there was a limit on how much you could pay yourself as an individual, and that was 100,000 divided by 52 multiplied by 8, and that number was $15,385. So over the course of 8 weeks, you were not for the purpose of forgiveness.
You weren't allowed to pay yourself more than
that. If you did, anything over that would not be forgivable. I am not sure how that math is affected by the new 24-week period, because you now have 24 weeks to spend the money, even though it is still 8 weeks worth of help. I think it's a little bit confusing because the calculation was squarely based on the fact that you could only pay yourself for 8 weeks. Now, if you can pay yourself for 24 weeks, not that you have 24 weeks worth of help, as I said, but I'm not quite sure how that math works out in terms of the maximum that you can pay yourself.
But before the 24 weeks, and if it's stuck to that, if you're a business owner, you have to cap yourself at $100,000. You take that 100,000, you divide it by 52 weeks, and you're really getting 8 weeks worth of payroll, right? So that dollar amount that I can pay myself max as a business owner is whatever.
15,385. And I've gotten that question very often. If you own 2 businesses and they're each paying you 100,000, and the 2 businesses each get a PPP, you are capped at 15,385 per person across all your businesses.
Okay, so you can't take it out on each business. I have another question here. It says, if I used all the funds after 12 weeks, can you submit for forgiveness then, or do you need to wait the full 24 weeks to submit your, to submit for forgiveness? And I think you might have mentioned this prior, that some people are going to be applying for forgiveness soon.
Yeah. So if you're done in 12 weeks, I don't know of any reason why you would not apply for forgiveness then, for the very simple reason that this process is going to take a while. When you submit for forgiveness, the bank is going to have 60 days to review your application, and then it's going to turn around. If they approve your application for forgiveness, whatever the amount is, they're going to turn around and ask the SBA to pay them that amount, because that's how the forgiveness works. It's the SBA pays the bank. So let's say I have 100,000 and I apply for forgiveness, and for sake of simple example, I get full forgiveness on my 100. Behind the scenes, what happens is the bank looks at my application and says, "Oh yeah, okay, so Wilfred is eligible for 100,000 of forgiveness," and the bank turns around and says to the SBA, "Wilfred's loan is eligible for 100% forgiveness." So the SBA then has 90 days to give the bank the 100. Once the SBA gives the bank the 100, the bank applies the 100 to my loan.
And it's zeroed out.
And it zeroes it out, right?
So it could be a couple months to officially get that zero balance. So so if you've spent the money, it's 12 weeks. What I'm hearing you say is just, hey, start the submission process now. This way,
call your lender and say, what is the process? Can I bring it in? I wouldn't really wait, because the earlier you get that loan off of your balance sheet, the better. The other reason why I mention it, that you should apply for forgiveness sooner rather than later if you've already spent the money, is that there are some other stimulus programs out there, and when you apply for them, they will ask you how much debt are you carrying on your balance sheet. So if you have a PPP, it doesn't matter whether or not it's going to be forgiven. At the date of application,
it isn't.
It's on your balance, and you have.
So you want to get that. If you want to apply for some of these other loans, that you want to make sure your application for forgiveness is done now. This way, you can get that zero. You can get that debt off your balance sheet, and if you want to apply for any more money that they're offering, you're saying you have a better chance because
Yeah.
you don't want that debt
Yeah.
on there. Oh, that's
Yeah.
a good point. I got one other question here, and let's see this. We used up all of the money on payroll, so I'm assuming that they're worried that because they hear this, 75 needed to be used on payroll. Now it's down to 60. Maybe because they're using 100, they're nervous. It's a minimum.
Yeah, it's a minimum. There is no maximum. The only thing that they have to concern themselves with is that for the purpose of the PPP, for the owner's compensation is capped at 2019 level. So as an owner, if you were paying yourself $1,000 a week in 2019,
you can't give yourself an increase.
Money, your compensation is capped at $8,000.
Okay, so for all you owners out there, it's on 2019. If you were paying yourself $50,000 on the books last year, you can't now take advantage of the max and pay yourself more. You have to go on the 2000.
Compensation is capped at 2019 level.
Okay,
that's the only thing that you have to concern yourself with in terms of using 100% of the money towards payroll. As the owner, you cannot give yourself a raise.
Okay, and then any other? I'm going to just wrap up because I think you did a great job of answering the 4 most common questions out there. We hit this one. The 75-25 ratio is now 60-40. That was part of the Flexibility Act that Trump signed on the 5th. The unforgiven loan balance can be carried over 5 years instead of 2 years. Can you tell us about that?
I was going to say, because this is very, very important. So it was signed on June 5th. All PPP loans disbursed on or after June 5th, the non-forgiven portion is automatically a 5-year loan at 1%. All the PPP loans that were disbursed before are still 2-year loans at 1%. The act leaves it to the lenders and the borrowers to negotiate their loan modifications. Now, this is not a complicated process. You just contact your lender and you say that you want a loan modification and for your loan term to be brought from 2 to 5 years. And there's a very simple reason why this was not done automatically. It's because it's illegal. The bank cannot automatically extend the term of your loan.
So you'd have to call up. So if you had a loan balance and it was prior to July to June 5th, it was only a 2-year term. At 1%, now it's 5 years at what percentage?
At 1%, still 1%.
But you have to reach out to your lender, make those. What's an example? And then I have one other. I want to get to one other FTE question out there. But what's an example of why I would have a loan balance?
So, and for simple math, and for clarity, I like to use extreme examples. So let's say that I got a $100,000 PPP. And let's say that it was, my company is a daycare and I can't open yet. And I figure, and it's especially, this example really holds up in the 8-week scenario. 24 weeks brings us to closer to the end of the year. And at that point, I'm sure that a lot of businesses will have reopened in some capacity, but 8 weeks, if you're in the city, you're a restaurant, you're still not open at the end of 8 weeks, right?
Yeah.
So for a company that is in that scenario, and you're not bringing people in because there's no business to be had. Like in my example, I'm a daycare. If I don't have children in, I'm not bringing anybody in, right? And so let's say end of 8 weeks, I have not spent any of the money, except I paid my rent, I paid my utilities and all of that. And let's assume that was, I don't know, $10,000. So then at the end of the 8 weeks,
I have 90,000 left.
At 90,000 left, 0% of it would be forgivable because I use 0 on payroll.
Okay. So in that case, that would be a loan balance.
And
that would be
that
a
is
2-year payment plan at 1%.
at 1%. Yeah.
And if it just remained that way and I wanted to keep that money, I would call them up and say, hey, I want 5 years at 1%.
I want 5 years. Yeah.
But now, obviously, that's the 8-week scenario. Now these people have 24 weeks.
Yeah, so they have a lot more time to spend the money. But I can picture a scenario where you would still sit on the money. Let's say I own a concession stand in Barclays Center.
Yeah.
Right?
Yeah, that's not going to be open for a long time.
That's not going to be open for a long time. So I might still be sitting on the money because I'm not bringing anybody in.
So after the 24 weeks, if I say, hey, I want to keep this money, I want to keep it in the bank because I don't know what's going to happen. And at 5 years at 1%, I'll keep it. Now that's a good example of the unforgiven loan balance and how it works. It went from 2 years to 5 years.
And you have to call and ask.
You've got to call them. You don't automatically just get that jump from 2 to 5. You got to call them. I have a question.
They can't do it. They can't do it. They're not allowed to.
They can't do it.
Not allowed to do it.
So
you have to call and ask for it.
Oh, so the bank is not even allowed. You have to.
No. That's what I said. That's what I said. It's the bank cannot unilaterally extend the term of your loan. That is not allowed.
Oh wow! So you have to do it.
So you have to ask for it.
And you have to call the SBA.
No, you call your bank.
Oh wow! All right. So your banker can't do it for you. I got you. I see what you. So so that your banker can't make changes to your loan.
100%.
Yeah.
But it's a bank loan.
So I have another question here. For purposes of FTE, if the business is under social distancing rules and can't rehire back those people, what happens then?
So you fall under the safe harbor provision where, as I was saying earlier, your forgiveness. So the best way to understand it is that your loan forgiveness is affected by two things. How much you spend on payroll and have you maintain your headcount. Now, obviously, they kind of go hand in hand, right? But the way it was designed before, you could have been hit with a double whammy because you cannot bring people back. So you get a reduction in overall payroll expense. So that's your first whammy. And then your second whammy is that you cannot bring them back. So you get a reduction in FTE. So you'd be penalized twice, right? So the way they set up the safe harbor, so you have a lower number of FTE that is going to affect your forgiveness, but not because you are unable to rehire people, not because you cannot find fully qualified people, not because you cannot return to the same level of business activity. So those will no longer count against you. The only thing that will count against you is the fact that you are spending less on payroll in total amount as opposed to what you were using last year. But the FTE, the headcount part, will not be applied in the calculation of your quote-unquote penalty. So
they'll only use the, so you're saying they can only use one or the other? Is that what you're saying?
It's not that they can't only use one or the other. It's that so when you think,
can you give us an example of that? Can you give us an example of that to just, kind of put a picture to it?
Yeah. So let's say that you were spending on average $20,000 in payroll a month, and you had 10 employees, right? Your FTE was 10, and you are unable to bring back the entire 10 because of everything that's happening. So let's say you're only able to bring in 5, and you're now spending $10,000 on payroll. The way it was set up before, you would have been hit twice. You would have been hit because your payroll expense went down, okay, and then you would have been hit because your FTE went down. All right.
Yeah.
You're with me?
Yes, I am.
Okay. So what they've done with the safe harbor provision is that they say, okay, we are not going to be penalized because of a lower head count as long as this lower head count is caused by A, B, and C,
Okay.
which covers the gamut. Now, even the quote unquote penalty from having the 10,000 is alleviated because you don't have 8 weeks, you have 24 weeks to spend the money. So you have 3 times as long to spend the money. So it might very well turn out to be a non-factor.
Okay, and like you said, all right. And now, if you had mentioned, I guess this is, I don't know if this is tied to FTE, but you mentioned there are some factors where they're not penalizing you, that if you're, if you have a hard time bringing people back, but you have documentation that you that you offered them their jobs, but they just don't want to take them.
No, that was the old rule.
Okay.
So that was the old rule where it was hard to enforce because let's say you are offering people to get back, right? So my wife works in foster care, for example, and there are certain positions there that require that you do in-home visits, okay? So if you are running an agency that is doing that and you have one of your workers and you say, I need you to go do a home visit, and the worker says, yeah, my job requires that I do home visits. I don't feel comfortable doing that. I don't want to come back.
Yeah.
Under the old rule, you would have to make them the offer formally. You would have to document their refusal of the offer. And that was the more problematic part because document the offer is easy. You can send them a certified letter. But if the person never responds, then how do you document their refusal? Just the fact that they don't show up?
Yeah.
Or if you send them a text, you save screenshots of text, you document that they never responded. It was really hard. So now they've changed that to, you're unable to bring people back because of the rules. If you fall under that category, then you get a free pass for the FTE part.
Okay, that explains that really well. I wanted to. I have. Somebody's asking about who's speaking. So we're gonna throw back your contact information. If people want to get a hold of you, they can go to your website, I would imagine, right?
Yes. So very quickly, my company is an insurance and business advisory firm with a big emphasis on the business advisory part. And I help business owners answer 4 basic questions. What is my company worth? How do I protect it? How do I grow it? How do I transfer out of it? And this is usually wrapped within 2 other questions, which are how do I fund all of this? And how I do all that while paying the least possible in taxes. So those are the areas in which I work with business owners and I counsel them. And then whenever needed, we would bring in the experts, an old agent for tax stuff, an attorney, but overall, my company, we advise business owners regarding how to grow their companies and how to protect it, how to value it, and ultimately when it's time to get out, how to get maximum compensation for their life's work.
Well, thank you, Wilfred. And anybody, I can always do an introduction to Wilfred. You could always reach out to me via phone, via email, and what I can do is an email introduction or just have exchange the information so you can get in touch with he can get in touch with you. So anybody feel free to reach out to me or Wilfred directly. His website's there. My contact information is there. And I think you did a great job today. Thank you so much, Wilfred. I appreciate it.
Yep. And if you ever want to do a follow-up, I just want to throw it out there.
I would love to.
If you have people that participated in the EIDL, the disaster loan program, I have a presentation that I put together on that I deliver on a regular basis. And there is a new stimulus program called the Main Street Lending Program. This one is for profitable companies, companies that were doing well in 2019 that have been hurt by by COVID-19. I would say from a profitability level, your business must have generated in the vicinity of $50,000 of EBITDA. If that's the case, then you can take advantage of that program. The loans start at $250,000, and they go all the way up to $50 million, in some cases up to $300 million. So this is also another stimulus program that I cover.
I think that would be a great follow-up. I think people, you know, we'll get the feedback. But I mean, if people are asking for information on that program, which I think what you said is the requirement needs to be that you were profitable in 2019 without
2019.
Yeah. All right. So that's, I think that might be something.
40, 50. Yeah. I'd say $50,000 in profit in 2019. You can start looking into that program.
Okay. I think that might be a good follow-up. If people are asking for that, reach out if that's something that you guys want to hear more about that program. And obviously, I'm assuming that if you got the PPP loan, you're still eligible for that program.
Yes, yeah. If you got a PPP loan, you're eligible. And that program is actually what I had in mind when I was talking about the forgiveness, because that program asks at the date of application for you to list all your loans. Okay. So if you have your PPP loan on there, your PPP might actually knock you off, not because your company is not eligible, but because you're eligible. So let me give you a quick example. Let's say that your company is making $50,000 in profit, and you qualify for the priority loan facility, which is 6 times EBITDA. So you would qualify for $300,000, and you have $100,000 PPP. So that $100,000 would offset that $300,000. So you would qualify for $200,000 of new money. But the program itself doesn't disburse anything under $250,000.
Wow. So basically, get your applications in for forgiveness. If you've already spent the money, don't wait. Just start submitting now, because it's going to take a little while to get that off your books.
Yeah. Because if you're looking for other stimulus programs, almost all of them are going to ask you about current levels of debt. And again, the disaster loan program, that program has a lot of little gimmies and gotchas that I go over for anybody who wants to learn more about that. Also, this program goes up to $150,000. So this is also one that has been getting a lot of traction recently. A lot of people have been getting offers, and they want to know, oh my God, I have the PPP, I have the EIDL. How do I use both of them to get maximum advantage, and blah, blah, blah. So this is also something that I cover in my presentation. So we could pick any of those topics for a follow-up.
Great. Well, Wilfred, thank you again. If anybody needs any help, on that note of getting those applications in for forgiveness in, reach out to your, if you are a Zuma payroll client, reach out to your rep. We do have reports to help you get through that application a lot easier. The information's there. So please reach out to me or your dedicated representative, and so we can get those applications in and those that debt off your books. Thank you so much, Wilfred, for your time, and everyone have a great weekend. Thank you.
Thank you.
Bye.